Okay, this is Brant. I'm back, tradeguild.blogspot.com, and I was a little rushed there at the end of that last video. I want to kind of show you this little system here and make some sense of it. And I think the end of that last video didn't make a lot of sense as I was watching the time clock. Basically, I have a 10-day and a 22-day moving average with that custom cumulative indicator. You can see a little bit better now that I'm zoomed in, and RSI down here in the bottom window. Basically, what I'm doing is I'm using the crossover of the 10-day moving average above the 22 as a buy signal, so long as it's confirmed by this blue indicator crossing over its moving averages and RSI above this 0 level in here. So you may look at this and say, well, okay, there's a whipsaw, there's a false breakout there of the moving average or false crossover. But as you can see, RSI did confirm that signal, but this custom cumulative indicator never crossed above. So for me, this is a false move. I wouldn't have taken that signal if I was trading the NASDAQ or the Qs. And here we have our signal here with the 10-day crossing above that 22. And we have confirmation at this level. So here's where we get our signal, and RSI is above 0. So basically we get our buy signal within this flag in here. And that makes a lot of sense to me. So I just wanted to show you that system. It works on all kinds of different stocks. And next up, I just want to show you one other thing. This is a volume weighted average price, this red line, and it's set for a daily time frame. And basically this is telling us as far as what volumes traded at what price, what our average price is. So you can see we're trading right now pretty well above that, and I think that probably contributed a little bit today to the underperformance in the NASDAQ, as it's had a very strong week, and I think maybe traders were taking some profits off the table going into the long weekend. Next up, let's take a look at the S&P 500, and while I'm pulling up this symbol, I'm just going to get a drink of water here real quick. Okay, excuse me. So on the S&P earlier in the week, when we're talking about the flags and what we expected to see, we hadn't had the breakout as of yet. And what I said was that we have this little pennant that formed, and it's not entirely obvious on this chart, but if we go to an hourly chart, and let me just back it up a little bit, and there's the trend lines, and there was this little pennant, and even volume, which is not showing on this chart, even volume confirmed this little pennant. And I said at this point, we were right here when we made the video, I said I think we're going to see a breakout, and we did. And look at this nice opportunity here. It's a if you're trading the spiders, it's a pullback to the breakout level, this little pennant, and it makes real strong or good sense to buy the SPY at that level. We see the breakout and we get a little discount on it, and it starts moving up again. So very nice action there. I like what I saw. And again, Brian Shannon, who I have a lot of respect for, is calling this a head and shoulders bottom, which that's fine. I view it a little bit differently. I see it as a W bottom in here, more or less, or a complex bottom. But in any case, we got this breakout and a pullback on that consolidation. That's where that pennant was, to the support level, which was former resistance. And we got a nice rally, a nice push off that. And the S&P had a strong day, and it looks to me like it wants to rally some more. If we take a look a little bit closer here at the candle today, it's a nice big candle, it engulfed this previous one. So I think there's some more room for rally. If we take our summer rally equation, our 9.3%, and we go back to our June lows over here, basically what we come up with is 1223 is our low times 9.3% gives us 113 points. And that puts us at the 1336 level, which says to me that it is entirely possible, 1336 being above this 13, maybe about 1320 level. So it says we take out those May highs on the summer rally. Let me just show you an hourly chart here, and I have a little question as to whether or not the S&P maybe is going to pull back to this 22-day moving average here. We see it's pulled back into it before, so that's a concept. As this rises, maybe we see a little pullback to that 1308 level or 1307. So look for opportunities there, and I just want to point that out. And the last thing on the S&P 500 is basically we have money stream. I was complaining a little bit earlier in the week that it hadn't really gotten in gear, but now we see it with the price. It's making the new highs with price here and here. On a relative basis, though, there's still a divergence at this June level. Here's price and money streams hanging right in there. Money stream is basically at the same level as it was in June, but price is higher, so that suggests we don't have as much accumulation as we had back then on a relative basis. So short-term trend looks good, but long-term maybe again we have a little stickiness after we pass that May high. So I've got a couple minutes left on this video. I'm going to get a little more water, and I'm going to show you TIE, titanium metals core. And Defender from the tag board has been all over this one lately, and he asked me earlier today, what do I think of it? And it's not a perfect, let me get a chart that's a little cleaner here. It's not a perfect wedge, but it looks like a wedge to me. And basically what a wedge is, and when it descends like this, it falls, it's a bullish, it has bullish implications. When it ascends, when it's heading up like this, it has bearish implications. You look for a breakdown out of it. In this case, we look for a breakout out of it. And he asked me what I thought about it, and I said I thought it was, a wedge formation. And lo and behold, it broke out today, up a little over 7%. And basically, it functions like an ascending triangle or symmetrical triangle. It basically is a building up tension like a spring, and when you get to this apex here, you expect to see a breakout. So, it's not textbook, and rarely, these patterns are rarely textbook, but it worked out great. And basically another thing you look for, just like all consolidations, is diminishing volume into the consolidation, so you can see it there pretty well. Also of note, I think it's worthy to point out that we had some MACD divergences. As we made lower lows in price, we were making higher lows in MACD. So this was telling us something. It was telling us basically the bears had less and less staying power, less force on each successive move down. They were expending their capital more or less, and it broke out nice. Let me see what else I want to show you here. Something I was looking at on an hourly chart. Let me see what I was looking at. Okay, on an hourly chart, it looks like we're getting a little consolidation in this area. So maybe there's a buying opportunity there. I would probably say go ahead and put a stop in if you're in this, or if you're trading the move here, maybe a stop below 27 there. On our indicators here, basically what we saw was in May, we were seeing distribution as price was breaking down, and we saw less and less distribution, like MACD was telling us, and then we transitioned into buying here with BOP. So all in all, I think TIE's got a little more upside. I'm a little bit bearish on commodities for the long haul, but this is a tradable stock. So I'm going to come back with a couple more videos, a couple more charts.